Hi, I'm Pat Keon, a senior research analyst with Thomson Reuters Lipper. I'm here to speak to you about the fund flows activity for the week ended Wednesday, March 7th. We'll start by taking a quick look at the market activity for the week. The equity market suffered another volatile week thanks to U.S. President Donald Trump's announcement that he would seek to impose tariffs of 25% on the steel industry and 10% on the aluminum industry. This threw the markets into a tailspin the day it was announced. The Dow Jones Industrial Average closed down 1.7% that day, and the S&P 500 index was closed down 1.3% that day. The tariff news dominated the week as the administration tried to sell the public on the fact that they were just trying to protect the U.S. steel and aluminum industry, while critics of the proposed tariffs speculated that this would potentially cause a trade war with China and would most definitely cost jobs on the home front. In response to the tariffs, Gary Cohn, Trump's top economic advisor, resigned in the wake of the announcements as he was against levying any tariffs. Well, on that good news, let's turn our attention back now to the fund flows activity. We'll start by taking a look at our fund macro groups. Equity mutual funds had net inflows of $323 million for the week. Taxable bond funds took in $1.5 billion. Muni bond funds had net inflows of $505 million. And money market funds, the big winner for the week, took in $12.7 billion in net new money. Let's take a closer look at each one of the fund macro groups now. We'll start with our equity fund groups, starting off with the mutual funds. As we said, mutual funds saw net inflows of $323 million for the week. Back to our old trend here, where net non-domestic equity funds were responsible for all the net inflows, as they took in $2 billion for the week, and domestic equity funds saw net outflows of $1.6 billion for the week. For the year to date, non-domestic has net inflows of just over $35 billion, while domestic has seen about $24 billion leave their coffers. Turning back to the weekly activity again for non-domestic equity funds, the International Multi-Cap Core Peer Group had net inflows of about $500 million on the week, while on the domestic side of things, equity income funds saw about $550 million leave their coffers. Let's turn our attention now to the equity ETF group. Net outflows for this group last week, they saw about $10.1 billion leave their coffers. It was the fourth net outflow in 5 weeks for the group. Once again, the main culprit here is the SPDR S&P 500, about $10.5 billion in net outflows. You can see that the second largest net outflow is just about $600 million for the iShares Russell 2000. On the flip side of things, iShares Core MSCI Emerging Markets took in about $550 million for the week. Let's move on to our next asset group to look at. We'll take a look at the taxable bond fund peer groups, starting with the mutual funds. Net inflows here last week, about $1.5 billion for the group. Driven by loan participation funds, had net inflows of about $550 million. Interestingly, this is the sixth net inflow in 7 weeks for the group, for a total of about $1.8 billion in net new money. And this comes directly on the heels of a streak where they had 14 straight weekly net outflows, where they saw $4.4 billion leave. Speculation here is that with the economy heating up and the Fed raising interest rates, investors are flocking back to the floating rates and the bank loans. In other news in the taxable bond fund group, we saw multi-sector income funds take in about $440 million in net new money for the week. Let's switch over now to taxable bond ETFs. Net outflows for this group last week, about $2.4 billion. $2.4 billion left their coffers. The main outflows coming from the iShares Core U.S. Aggregate Bond product had about $1.5 billion leave, and the iShares 20-plus year Treasury Bond product had about $400 million leave. Conversely, the iShares Core 1-to-5 U.S. dollar bond took in about $230 million for the week. Our next group to take a look at is the muni debt funds. This week, net inflows for the group again, about $505 million. Driven by the national muni peer groups. Intermediate muni debt funds took in about $193 million, and general muni bond funds and high yield muni bond funds each had net inflows right around $170 million for the week. Last group to take a look at is money market funds. As I said earlier, the big winner here this week, about $12.7 billion in in net inflows, possibly all the uncertainty caused by the tariff announcement. Investors wanted to sit this one out a bit and take a look at things, wait till things settle down. Largest inflows going to the institutional U.S. government money market peer group, had about $9 billion in net new money come in. Largest outflow belonging to institutional money market funds, saw about $2.1 billion leave. That wraps up this week's report. Please join us at our website to take a closer look at the data for yourself. It's www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.